All right, welcome everybody. I'm excited to have you guys on our webinar today. I've got Sunil on as well. So we'll go through our presentation, and we're excited to do this. We've got 10 amazing condos that we're going to be building in the Georgetown area, or just north of Georgetown, actually, Tenleytown Metro. So it's pretty close to all the cool stuff in DC. And we'll go through a little bit about how Sunil and I work, how our team works, how the process works, and what it means to you as a potential investor. If you have any questions, please just put them in the chat window. We'll be happy to answer them as we go through the presentation. All right, so before we begin, everyone, please take a look at our legal disclosure here. All investments, including real estate, are speculative in nature and may involve substantial risk of loss. As an investor, you should have such knowledge and experience in financial, investment, and business matters to be capable of evaluating the merits and the risk of the prospective investment. Past performance is not necessarily indicative of future results. So please make sure you do your due diligence and make sure that, you know, if you do decide to invest with us, that it meets your investment objectives and goals ahead of time. So I'll let Sunil introduce himself now. Having trouble hearing you, Sunil. All right, well, I guess we'll continue on. So my name is Dan Lesniak. For those of you who don't know, I have been in real estate professionally since 2011. That was my first year that I got my license. I sold over 22 million that year. I since wrote a best-selling book about my experiences, and that book has gone on to sell about over 20,000 copies. I got my start in real estate as an investor in 2003. That's when I bought my first house using the VA loan. So as you can see, I was in the Navy. I used to drive submarines. Now I'm married to Carrie. You'll see her on the next slide. I have 3 amazing children, and I compete in Ironman, Ultraman. Now I think Neil's
Am I
audio.
there? Did I?
You're there.
All
Yep.
right.
So I'll go back to your slide in case people missed it.
All right. Sorry about that, guys. I don't know. I'm being technologically challenged this morning, but thank you everybody for joining us on this lovely Friday here. Thank you, Dan, as well for putting the webinar on. Yeah, basically, as it says there, I actually practiced emergency medicine for about 8 years. I'm an emergency medicine doctor, physician. I have not practiced for about 11 years. So I've been out of medicine completely for about 11 years. I've been in real estate, specifically the DC real estate market, since 2001. So quite a while now, 19 years or so. Completed over 100 projects successfully. Started with very small projects like rehabs, basically very small projects. Now we're doing larger multifamily, anywhere from 10 to 50 unit multifamily projects. So it's been a great journey. DC is a great market to do real estate in. In fact, I think one of the best in the world. Actually, a lot of investors worldwide are looking at this market. It's just booming, growing every day. So I'm very excited about this opportunity, as well as the market overall here in DC.
Yeah, thank you, Sunil. We're excited about the DC market, as well. So Carrie will also be heavily involved in this project. She is my wife and business partner. She started her real estate career in 2003. She sold over $1 billion worth of homes for Indie Homes, new home builder back in the early 2000s. And then she sold condos for the Mayhood Company. So she's got a huge background in new home sales. And she did all of that prior to starting her team, which she did in the middle of the last Great Recession. And in total, over her career, she has sold over 4 billion in real estate.
Yeah, and she has an amazing husband, like that
She
slide said.
does. And so a little
Just
bit
want
about
to
our.
point that out.
Oh, thank you. I appreciate that. She's like told me before I should take that out, but
I think you put it in purpose, but it's okay.
so our sales team. These are some of our members. We are the highest selling team by volume in the DMV. Number 33 in the nation in 2018, probably in the top 25 in 2019. Those haven't come out yet. We also have a coaching company and train lots of agents through events, courses, and group coaching, personal coaching as well. So our team has a large presence in the area. Uh, so COVID-19, I know we're getting a lot of questions about this the last couple of weeks. So this is a little bit about what we are seeing on the ground as the top real estate team in the DC market. So in the last 2 weeks, we've ratified 45 new contracts. Right now, our team is averaging 70 new appointments a week. We've switched much of what we do to virtual. So we're selling homes, listing homes successfully through Zoom, through webinars, through other, virtual methods. We are still hiring for all positions. I know, people are wondering what's going on with that. We are still growing, still expanding on the construction side. We are still getting permits. Construction is still happening. And, like Sunil said, the DC market is very resilient. It weathered the 2008-9 time period quite well. It really didn't have too much of an effect for most real estate in the area back then. So we're quite confident that the next, the timeline for these projects will work well. Most of what we're doing is not delivering till at least a year. This project will be Q2 of next year. So um, again, we're quite confident in it. And actually, last year, and so in Q4, this is just an interesting stat. They did a study on homes needed in the DC area by 2030, and the study showed that if we continue development on the pace that we're at, if we continue growth on the pace that we're at, we've got all these companies moving here, Amazon, Microsoft, Google's moving more people out here. So we're getting government and tech now, which is quite nice. But by 2030, they're projected to be a housing shortage of 374,000 homes. So, I actually think long term the the prospects for the DC real estate market look stronger than ever.
Mhm. Yeah, yeah. I mean, I couldn't agree. I could go on and on about the DC market, so I'll let you. We'll stop there, but let's go ahead with the investor highlights.
Yeah, so this project is very similar to how we do most of the funding for our projects. We are offering a 15% annualized preferred return paid at the end of the project to our Class B investors. So that means if the project goes 18 months, which is what we've pro formed it at, the Class B investors, that preferred return should equal between 22.5 to 23%. The Class B is paid after the bank, but before Class A, which is Sunil and Carrie and myself. We don't charge a builder fee or a commission, so we're not making any money until the investors are paid out. There's a 50,000 minimum investment amount. The projected timeline is going to be 12 to 18 months. Bank loan will be guaranteed by us. We expect to close this month. We do take IRA and retirement funds, so there's you can invest those types of funds in this project through self-directed IRAs. If you have questions about that, let us know. and we are taking funds now for the project, and your preferred return starts from the time your money is in. So I'll let Sunil talk a little bit now about the project itself.
Yeah, this is actually one of my favorite projects that we're doing of all our projects. It's an existing building that we're actually converting into 10 luxury condominiums. It's in the Tenleytown submarket of Washington D.C. Which, if anybody on the call is from Washington D.C., just type it in the message so we can tell, or we can know that. But it really is probably one of the best submarkets of Washington D.C. It's near, as the slide says, it's near American University, Georgetown, Chevy Chase, so really really high end. And one of the nice things about this particular project is there's not really a lot of condos for sale, especially in our price point, the ones that we'll be showing the price point here soon. Really, what you've got in this market is a really big single family houses, a couple of $1 million, and then you've got the rentals on the other end. So my feel is this one's really going to do very well. I think it's going to pre-sell, which is a huge advantage for developers like us. Just simply because there's not a lot of this type of product there. So yeah, I'm really excited about this one. We have a number of projects all over DC, but this one I think is a particularly good one that we're doing right now. And some of the things that obviously these are projects that I take very seriously. They're like my children, my babies, so to speak. So we really want to make sure these projects are done properly. And we take a lot of time and effort to make sure the features and the specifications are done basically to match the market to what the market is looking for there. A couple of things is that we work with a very good design firm here called Ram Design. There are architects and engineers. We have a gentleman named Michael Johnson who actually does our interior design. So he helps select finishes and countertops and things like that. So we really have a very good team of people saying, "Hey, this is what's going to sell in this market." And of course, we use the feedback from the agents on Dan's team that are out there selling every day. They're interacting with customers, so they're seeing what they want. So, for example, one of the big things is roof decks. We pretty much always try to do roof decks on all of our projects. People really love that in DC. It gives you a great outdoor space that is accessible through your unit. These are, of course, for the upper units would get the roof decks, and it's just you get great views. Just great place to hang out in the summer, do a barbecue, spend time with friends. So that's a really really popular option. We just spend a lot of time on the kitchens, the flooring that we use. The picture that Dan has there is one of our recent projects that we actually just sold that unit yesterday. Actually, so it actually was transferred and sold yesterday. And just a number of things. I could spend an hour just talking about all the finishes we do, but I think the bottom line is that we really take a lot of time and effort on this, and we basically deliver what the market wants. And we spend a lot of time figuring that out. So that's why our units sell, typically for a little bit higher price and very low days in the market. That unit I was talking about that sold yesterday sold for full price. And do you remember the days in the market, Dan? It was like less than a week, I think, right?
It was quick, and it was in March. So yeah, so
Yeah, it
just
was while the kind of crazy. It was just before the really bad stuff hit with COVID, but yeah, it sold. I think it was like 4 days. I'm pretty sure it was less than a week, and we got full price for it. So yeah, I think a lot of it is because we put in the right features and specifications to the project.
yeah, the feedback was really great on that. So we've got the unit mix up here, and I'm gonna change the slide really quick so that we can go through some of the layouts. So give me just a couple seconds here to bring up the layouts. All right, so this I think you've already seen the outside rendering, uh, just the view from the side here, the location. And you can see it's an end unit, which is nice because we are going to get tons of natural light in this project. So every unit, it's 2 units per floor. Every unit will have 2 different walls of windows. The end. Uh, the end and then the side. So they're going to get a ton of light in these. Every unit's got two walls of windows basically. This is the layout. I realize these are maybe a little small to look at, but we're gonna get two bedrooms basically on each floor. A smaller one, a bigger one. The layout is essentially the same for the first 4 floors. So I'll just click through, and then the big change, of course, for the top level units, they are going to be 2 levels. So they'll have the 2 bedroom, 2 bath layout on one floor, and then a spiral staircase that goes up to this penthouse level where they get a additional bedroom, bathroom, and a big outdoor patio. So these penthouse units are going to be really amazing with 3 bedrooms, rooftop decks, and in this particular area there is just very very little new condo development. So these are going to be very unique condos and
Mhm.
great floor plans for the area. And I'm going to go back to the previous slide here and catch us back up, and we can go over the unit mix and the sales per floor. All right, so you'll see here we start off in the low 400s for the smaller unit that's in the cellar level, and then in the low 500s for the bigger unit that's in that level, and then we gradually go up as floor prices go up. Um, there is one unit you'll notice that's priced well below the others. That's the $117,000 one there. That is because we're opting into the inclusionary.
I see. Yeah.
Yeah, I said it wrong. Inclusionary zone. So uh, by having a unit that we sell at through this program, we're allowed to have a bigger footprint. So we get about 100 square feet uh, on average extra per unit by opting in this program, and that delivers us more overall value, even though we have to sell one unit at a lower price. And then the penthouse units top out in the high 7 to low 8s, which I think is a great price for those. I think those will probably go higher. So
Mm-hmm.
I think we're being very conservative in our pro forma, and yeah, those unit mixes obviously bake into the pro forma. We start with our purchase price of just under 1.8 with closing costs and whatnot. Our purchase price will be in the low 1.8s actually. The construction budget is around 1.5 million, with soft cost being about 10% of that. We do have a contingency built in, like we always do. Um, our financing costs are around 430,000. That's including the payment to investors, all of our different bank fees and whatnot. The sales cost is what we pay buyers agents on this. So people that bring us buyers, plus the DC transfer taxes and whatnot. So our total costs are going to be roughly 4.2 million. Our sales price is going to be just over 5.2. So we've got over $1 million in profit in this after paying off the preferred return. So we've got right around a 25% return on cost, which is our goal. I think it'll actually end up being higher, because I think our sales price will beat the numbers that we have here. Um, so we're looking to raise between 8 to 900,000 in equity. The rest will be done with a bank loan. We'll have at least 2 to 300,000 of our own money invested in this project as well.
Mm-hmm.
So these are some of the comparables. There's not a lot in this area. So I feel like we're gonna have really good sales success on this, because there's just not many condos in this particular market. The demand is definitely there to be this close to Metro. We have a question about the construction loan, the rate and the term. And yes, it is a local lender. It's Freedom Bank. Is that correct, Sunil?
Correct. Yes.
And the rate, I believe, is 5.75. Does that sound correct?
Yeah, it'll be in the mid fives, so mid to high fives. Yes.
It's tied to LIBOR, but it has a floor, so I assume it could potentially get better to 5.5. I don't think it can go below that, but I'm
Right.
not afraid of it going up in this environment. And I believe it is 2 years with uh, the option to extend for a
Mm,
half point, or is that correct?
correct. Yeah.
Okay. Um, that's pretty standard to what we normally do for these types of projects. So back to the comparables. There's really not a ton, and you notice these are a little bit. Most of these units in here are bigger than the ones uh, that we have. So we tried to adjust downward. Um, these ones on at 4101 Albemarle. I think those are pretty good representatives of what we'll get for those rooftops. These aren't as new as ours, of course. Our penthouse levels, and uh, I think the layouts. If you dig in the layouts of these, ours is a much better layout. So overall, we're highly confident in our comparables, and we just don't think there's much competition. So we think we'll be in a really good spot. This is what your potential investment looks like at different levels: 50,000, 100,000, and 200,000. We've kind of performed the extreme ends of it. Like if we did it in a year, if we did it in 2 years. Remember, I said it's based off of the time your money is in, and I believe on this project we'll be right at the 18-month mark. But we do have the plans almost ready for submission. Is that correct, Sunil?
Yeah, we're looking to submit hopefully next week. I was actually just working on it this morning, so we got some progress this morning. So yeah, within 1 to 2 weeks we should be submitted.
So we'll probably submit before closing even,
Hmm.
and so that 1 year timeline is not unrealistic. Um, so it could be a quicker project, but we are projecting 18 months. The risk profile. So I put together this graph to show people what we think the risk profile looks like. So we're projecting a sales price of slightly above 5.2. That gives a developer profit of 1 million. And as a limited partner, with our structure, with the preferred returns, you get more security if we have more profit in the deal. So you want to look for deals where there is a lot of profit for the developers, because there's a
Hmm.
lot of stuff that would have to go wrong for us to you know
Hmm.
burn through that million and put your preferred return at risk. You can see we would have to sell these for 4.2. 10 units, 2 bedroom units at 420 would just be insanely low. Like I you know
Hmm.
even with everything that's going on, I just cannot imagine
Hmm.
going for that low. That's 1 bedrooms don't even sell for that price.
Hmm.
So we think there's a lot of protection for the investors' preferred return, and even more so for your capital, of course. Anything to add to that, Sunil?
Yeah, just to kind of reiterate what you're saying. I mean, I've I'm an investor as well. And I see a lot of developers operating at like 8 to 12% return on cost numbers. I'm a new home builder as well. I still build in Arlington and DC, and typically on new homes, we're in that 10 to, if you hit 15% return, that's a really good return on a new home. And I just would caution investors to be wary of anybody who's operating below a 20% margin, because that's really your insurance, because it would mean that the project, if it has a 10% profit, then it would have to be 10% off to be affect your return. If it's 20%, then that's double, or whatever, half the chance, or however you want to look at it. of any issue with your protecting your capital. So really, we typically we won't take a deal that's under 20%, and we're typically around 25%, if not even higher. We have some deals that are even higher. So I think that just is yet another reason why investors should be feeling good about these projects and feeling safe compared to some other developers that operate a lot thinner margins.
Yeah, no, I agree. Uh, here's just some examples of some current projects we're working on and have in our pipeline. So we just delivered 2 units on 14th Street, um,
Yep.
just off the 8th Street corridor. One of them sold within the first week. The other one, we've had a lot of interest. We expect it to be under contract any day. Just it's
Hmm.
had a lot of good interest. We're building 3 units, um, and this is in near Crescent Heights, I believe. They'll deliver Q3 of this year. 4 units coming on Capitol Street, which is in the Ivy City area. Again in Q3 of this year. We've got 2 single-family homes that are pretty close to this project actually on Alton Place. Those are going to begin construction any day now, so they would deliver 6 to 7 months from now.
Hmm.
And then we've got 11 units that will be delivering early next year near Columbia Heights Metro, and then a couple more units, 17th Street and Benning Street, that are over off of the Carver Langston area, just to the east of the 8th Street corridor. And let me see here, another one that we're going to be closing on in the next month or so off of Georgia Avenue. So there's another question here,
Hmm.
Sunil.
Yeah.
Um,
As far as like how it will be impacted, yeah, I'm not sure if that's condos or rental. Most likely rental, because most of the things we see in that area that are like multifamily or rentals. Like I can look into that a little bit, but I don't. Again, I think I don't want to keep try to overblow DC and especially Northwest or the spot, but you're literally walking distance from Metro. You've got a Whole Foods right there. You've got plenty of nice restaurants and shops. It's just a really really strong spot, and I think the pro formas that we did, I think, are actually conservative, and I think we're gonna probably end up pricing them higher once they're done. These should be delivering, like Dan said, in the spring market of next year. So knock on wood, we don't have another crisis next spring. We should be delivering in the exact right time when the market is really booming and things are going well. So yeah, there's always DC. If you know DC at all, there's just construction everywhere, and things are going, building everywhere. So I don't really see any impact. If anything, we'll have a positive effect from more construction around us.
and I do believe that building, I think I saw an article on Urban Turf about it. I do believe it's slated as rentals. So
Oh, you did? Okay.
yeah,
Yeah.
I I and that tends to be the case when you get to like 20, 25.
Yeah, it's almost that area. They're anything they build that big, they're going to rent out in that area. It's just a strong area that the people want to hold the whole property in that area.
Another question here about capital drying up in the commercial space for non-backed government loans. There's definitely been a little bit of a flight to quality that I've noticed in residential. So like FHA right now, they're they're not taking lower credit scores, um, and there's more restrictions on some of the residential requirements. And from talking to the lenders that I work with, it's been more of a pipeline control and volatility control. So they got flooded with refis when the Fed cut uh, the the prime rate. That banks borrow to zero. Everyone kind of mistakes that for mortgage rates are zero, and anyway, that spurred a um, rush to refi, and the same time, the Fed started buying more mortgage-backed securities, which made it really difficult for lenders to hedge because they like to hedge. Uh, from the time when people are locking in to when loans actually closed, and it just caused a lot of volatility in pricing. And I think some of the residential restrictions are based on that really. Um, for the type of units that we are going to be selling, at a 500K price point, I don't see that potentially being an issue. Like even if it was today, right? And the environment in 12 months from now will not be the environment that is today. Like um, most likely things will be different. It's just how it always is. So, but even right now, for qualified borrowers or our typical buyer, not having much of an effect. Um, Banks are scrutinizing projects a little bit more. So we already have the commitment from our bank on this particular project. So financing commercial deals isn't going to be an issue. And if it did become an issue for future developments, I think that's going to probably slow down development a little bit, and probably would actually be good for us for the projects that we do because there will potentially be less competition, less supply. So I hope that answers that. If you have more follow up, though, let me know. So this is just an example of a past project that we did with this exact model. This was a single family home that we delivered end of last year or quarter 3 of last year, and we raised this one at a 12% preferred return, so lower than this one. We had 5 investors that put in roughly 250. Project was completed ahead of schedule and on budget, and we sold it above our pro forma price. And most of our investors in that project rolled over what they made into new projects, and we get that a lot from investors in our projects. These are some more homes that Sunil has built. These are mostly in Arlington and the Northern Virginia area. A couple homes in DC, and completed condos. So couple different units that Sunil's already completed. Um, the is the one you just sold on here? I don't know if that we have that
Yeah,
on
Eighth
the
Street
eighth
was
eighth
just
street.
sold, so Eighth is on
Okay,
there.
that is on there.
Yeah, that was
So that
just
was 2
sold.
units. Someone bought both of them actually,
Mm-hmm.
and then we have a bunch of other ones under development. So between Sunil's experience building hundreds of homes, our experience selling hundreds of homes every year, um, we feel very strong about this project as well as the other ones that we currently have on the pipeline, even with the current situation. And if you guys have any other questions, you can pop them in the chat. We'll stay on to answer those. If you want to register interest, you can either click the learn more button that you should see on this webinar, or go to bit.ly/4050 Chesapeake, and you do have to use the capital C. It's case sensitive. So if you want to invest, there's a non-binding interest form that you can fill out either at that link or the button on this webinar. If you have any other questions, please put them in the chat window and let us know.
Well, looks like we must have answered all the questions.
Well, it was the second time we did it, so maybe we learned from last time.
Yeah, exactly. But yeah, no, thank you, Dan, for putting it on. And it's a project we're very excited about. And like Dan was mentioning, we are going to be submitting in the next 1 to 2 weeks for permits. So hopefully, we'll start to see, do some actually start construction in 4 to 6 months, and then deliver, Q2 next year. That's the plan with this one. Um, you know, that's assuming everything works out and everybody cooperates.
And then if you have a question, I did pop my email into the chat window, dan@livetheorangeline.com, so you can send me an email if you want to learn more. How many investors? All right, now we got some questions because we threatened to get off. Yeah, our minimum is 50,000, and we're looking to raise up to 800 on this. And so that would be like 16 max, but normally we don't have that many. Normally, we get a mix of investors in different amounts. So I would be surprised if we had over 10, in this one. The expected rate of return. So the investors get a 15% preferred return. So as an investor, you get paid first. So the capital stack basically goes. The bank gets paid, and they're at a 5.5% or so loan. Then our preferred investors get the next, the next revenue goes to them, and that would be based on a 15% preferred return.
Mhm.
And we think that the project will be 18 months in our pro forma, potentially shorter. But if it goes that 18-month period, the investors would get the preferred return. It would be annualized, so it would be around 22 to 23,000. Payment is yes, as the units are sold. This one will probably start paying off investors. I'm guessing at the 7th or 8th sale. So there's 10 sales. There's about $1 million of profit, on our side. So depending on the unit mix, the bank's gonna require us to deleverage and pay them most of the returns until that loan's paid off. But I think investors would start getting their money out around the 7th or 8th sale. A $50,000 investment for 18 months would be more like 62%, I believe, or 62,000. I'm sorry, because it would be roughly 23%, 22.5%. So the payment, the investor profit J should be the payback should be about 62,000 for 50,000 if it goes 18 months.
Yeah, 61, 62. Yep. And then did you mention, Dan, the how much are we looking to raise on this one? Or how much we have left on this one to raise?
Yeah, we the total we're looking for is 800. We've got one investor that is probably going to do a large chunk of it, probably over half of that amount. So we've probably got 200 to 400,000 available to new people, basically. The risk on this, I think on any real estate project, you've got risk on the sales side, so selling for the profit, or selling for the projections, and then I think you've got operational risk. So I'll let Sunil talk about the operational risk maybe for a little bit
Mhm.
on the timing and cost and how he mitigates that.
Right, right. Yeah, I mean your big cost on any real estate development at a high level is your purchase price, and then your, I guess you call it construction cost or whatever, all your costs from getting it from purchase to sale. So that's, that's, those are the two numbers, and the third number is your sales price, right? So once you know those three numbers, you can pretty much calculate your profit. So the risk there's really no risk on the sale, on the purchase price, because you know that going into it what you're purchasing it for. On the construction side, or the cost of getting it from purchase to sale, um, that's where 19 years of experience comes in. We've done a ton of projects in DC. We know kind of who to call when there's problems. I was just dealing with a couple projects this morning. We got a couple things resolved. I was texting back and forth with one of the inspectors that I know. Um, so I think that's really where, when you look at an investment and the risk, it's really who are the operators, like who are the guys in charge. In this case, you've got someone like myself who's been doing this for 19 years. We know this particular market. If you ask me to build a project in downtown Los Angeles, I could still do it, but I don't know the kind of the intricate ins and outs of how things work versus DC and the surrounding areas here. We know very, very well. We know our construction costs. We've done a ton of projects like this. We know what the materials are going to cost, the windows, the roof, et cetera, et cetera. So I think we've really got a really good handle on that. And you've got Dan and his team on the sales end, which is, I mean, you probably couldn't get a better sales organization. That's why all of my projects I've done personally, I've Carrie and Dan have sold for me since like 2013. Every project I've done they've sold for me, because they just have this huge pool of buyers that they amass through all their marketing. And even if a lot of projects of my project we've sold, and in fact that one that Dan showed you that we sold in August, the single family home, the buyer came from another property they were listing, and the buyer wasn't quite interested in that property, but oh, by the way, we have this other one, and that's how we got that buyer lead. So I think while there's always risk, we're not here to in any way to say there's no risk in this project. The risk overall, in my opinion, is low. And that's why both Dan and I have our money in this project and in similar projects, because I think we know we know we can get the project done. We know that we're going to get it done on time, on budget, and we're very, very confident in our sales numbers. So yeah, I think it's a project that I personally would invest in, because I am investing in it. So
Yeah. No, that great job on that, Sunil. On the sales side, um, you know, that's obviously the other risk
oh,
is are you projecting your numbers correctly, and are you able to get those right? And um, is the market gonna change? Or so a couple of things we do to mitigate that is, one, we don't predict basically it would sell today. So we're not like some developers or people that predict prices are going to go up 5% or 3% or anything like that. We're basing it off of today's numbers. Before we do any projects, we have two different agents on my team, including one of the most experienced agents who sells $50 million a year. They two of them, including on a lot of deals, and sometimes not not stay in contracts. So most of our contracts have steady periods where we verify all of our assumptions, including the floor plans, layouts, and what we think they would sell for. So we're definitely not afraid to not do a deal. And then the other aspect of that is obviously is getting full market value for the sale, right? And that's really where our team comes in, and having a very, very well trained team that is great at selling new product, really, and that stems from Carrie's days. Starting her career and spending 6-7 years just selling new homes and new projects. So we've really got that process, that expertise dialed in on our team, and And as we do more projects, like Sunil said, it really helps the sales process, right? So we've got, you saw about 10 different projects in the DC area. That gives us more lead magnets, right? And a lot of our marketing is designed to kind of have broad appeal, to make interested buyers contact us, fill out web forms, reach out to us in some way, shape, or form, um, so that we're capturing them, and then we figure out what project, what condo we have coming that makes the most sense for them, right? So we don't, you know, on our like we don't put things in our marketing that would weed out a potential buyer, right? One of those things, and this may seem counterintuitive, but like a lot of times we don't even put pricing on them because that could potentially weed out buyers, right? So we've like that project on Columbia Heights that we mentioned earlier, right? That's going to be higher price points. 700-800 really is going to be our minimum price there, and then units going up to 1-2. Well, we may get people who call on that project that have a 500-600K price point, right? So my team's gonna be trained to know about this one and send them here, right? But if I advertise like $1 million units, then I'm not going to get that 500K buyer that would be interested in this one. And so a lot of our marketing is based on that principle, to use all of these projects as lead magnets, and not to filter anyone out, but rather to get them into our system and then sort them, have my team sort them, and assign them to the best agent, get them in front of the best product out there depending on their situation. So those are some of the ways that we mitigate the risk on the sales side. And like Sunil said, nothing's without some risk. That being said, I think in terms of risk reward, with a 15% preferred return, the margins we have built into these, most of you have probably seen the volatility in the stock market. So now three times basically in the last 18 years, the stock market has been hammered, and had huge downturns. And I don't expect the risk of any of our projects to be anywhere near what we've seen in stocks, for example. So
Yeah.
there's definitely risk in anything, but in terms of passive investing, I think this is a great opportunity for anyone.
Yeah. Jay, you had a question about the needing more capital. We rarely, if ever, need more capital on our projects once we do the initial capital raise, because that's the way we structure our finance. So basically, all of the equity goes in up front at the time of purchase. So the bank funds the remaining of the acquisition at the time of purchase, as well as 100% of the construction, including contingency. So we have that as an interest, not sorry, not as a construction draw available to us once construction starts. So we typically do about 5 draws during construction period, or during a project. So that is 100% funded by the bank and the loan. And we even have an interest reserve built into the loan. So even our monthly interest payments come out of that. So we rarely, if ever, need extra capital on a project. And certainly, if we do, it's usually a relatively small amount, and that's something that we Dan and I put in personally, or we find from some source. So my screen just changed here on me.
Made us bigger.
Yeah, it's like a lot bigger all of a sudden. Yeah, so that's a great question, but that's one thing that oftentimes developers get in trouble because they need more capital. But we structure our deals so that we have all the capital up front, and everything is kind of covered, so there's no ongoing cash flow or capital issue down the line. And we'll be doing
The GC, that's you.
oh yeah, that's I mean we sell GC projects like this. I'm a licensed general contractor in DC and in Virginia. We have construction managers that manage our projects. I'm very hands-on. I was on a project just yesterday. Pretty much almost daily, every other day I'm at a project. So we have that whole team built out and ready to go.
Do you outsource some of the works, or do you want to talk about how you use
I mean,
crews
in
and
construction, it's all semantics. Everything is technically outsourced in construction, right? We have guy who comes in and does the demo. Then we have a guy who comes in and builds whatever foundation work we need done. Then the framer comes in. Then the trades so everything is like a sub. So nobody actually works for us technically, and we do that on purpose. But yet we do have a construction manager who kind of helps manage the site. It helps me because there's a lot of like day-to-day details going on that I try not to get involved in the exact details, but I'm pretty much aware of everything that's going on every project. So yeah, I think this. I've been doing this a while, and the system works really, really well. We tend to finish our projects definitely on time, if not sooner. The only thing that typically holds us back is some sort of government, stop work order or some outside force that comes in and tells us we can't work. But again, we know how to resolve those as quickly as possible too once we get into those situations. So yeah, I mean, I think it's we on the construction side, we I think do a good job. And Dan, you've seen our finished product on many projects now, so I think you can also vouch that our projects turn out very nice.
And the good thing about this project too that is sometimes an issue when we're doing more of the row homes is we're limited in the amount of neighbors that can be a nuisance. So that's a big thing in DC. And being an in unit, we only have one neighbor, and the neighbor is a commercial building. So I would sometimes you got projects where you have 2 or 3 or 4 residential neighbors, and they're gonna be more involved in causing potential problems. So this project only having one and having it be another commercial,
Mm-hmm.
neighbor, I think mitigates that risk as well, Jay. All right. Any other questions? If not, we will sign off. If you guys want to with.
I still having some issues here.
All right. Well, I guess that's it. Thanks everyone who stuck around. Really great questions. So we appreciate it and hope to be working with some of